Let's continue where we left off in the first part of new project software. And we had completed on our October 9th payroll, we had completed Anthony Bono, the first employee, check number 672. We put his 80 hours in that we got from our source document down here, and his $8 of union dues. Those, which is his voluntary deductions for this particular paycheck. So now all the taxes, the involuntary deductions, if you will, we simply click this button down here, calculate taxes, and if you look now, here's his FIT, his SIT, his city income tax. It says for Social Security that's being taken out. Every tax that's being taken out is in there. Now notice there's one called SUTA, and you're going to say to me, well, we learned from Dr. Dooley that SUTA is normally just an employer expense. It doesn't come out of the employee's check, and you would be correct. However, there are a few states that do charge a little bit of the SUTA out of the employee, and then the rest, the bulk of it, is still paid by the employer. And this is Pennsylvania. This project takes place in Pennsylvania, and they are one of those states. So the 84 cents that had to come out of this particular employee, and then the employer will also have to pay, but they'll have to pay a lot more than 84 cents. Okay, so everything looks good, and so you click on Save. Oh, before I take care of that, the taxes are taken from the books tables, and they are not using the wage bracket tables. They're using the percentage formulas, and so of course they will not exactly match the wage bracket tables, and they're using the new W-4 tables, and they're not going to match exactly what you would pull out in your IRS. Might be a little bit off from that, and it would be a little bit off from the wage bracket tables, but it shouldn't be more than $1 off of any of those things. It should be pretty close, so go with that. Okay, and now we're going to continue and finish the rest of this first payroll. So we click Add. We make sure the date is correct. We choose, now we'll go to the second employee, James Ferguson. Notice the check number. We had to put in the 672 for that first check number, but now the rest of them will just follow along. Okay, now James Ferguson, when we look down here on our source document, James Ferguson gets a regular salary, and there's no special anything that's coming out or being added. Okay, so since there's nothing else to come out at this point, we click on Calculate Taxes, and all his taxes are calculated out. There's his net pay at the end. Everything is good, and so we click on Save and OK. We click on Add, check the date, go to the third employee, Catherine Ford, look on the source document. She gets her regular salary and nothing else, so here's her regular salary, automatically comes up. Since there's nothing else, we click Calculate Taxes, and then Save and OK. Add. Dewey Mann is the fourth employee. I look on Dewey Mann on my source documents. He's just a regular salary, which is $13.50. There's nothing else, so we calculate taxes. We add Save. Okay. We add. We go down to the next employee, Joseph O'Neill. Okay, Joseph O'Neill is a regular salary with nothing else, so there's his salary. Calculate taxes, save, okay, add the next one down, Virginia Russell, and Virginia has a regular salary with nothing added, so we calculate taxes, we say save, okay, we add okay. Now Norman Ryan is the other one besides Anthony Bono. He was the first one that works out in the factory on an hourly basis. And Norman Ryan also does. So when we look on our source document, Norman Ryan had 80 hours, and just like Anthony Bono, he has $8 of union dues. Okay, so we go to this third column is the hours, and we put in the 80 hours there. And we go, I think the second from the last, yes, second from this last deduction is the union dues. Okay, so we've got those things in. So now we can click on calculate taxes. When we get his net pay, everything is good. So we can say save, okay. We go into add. Next one down after Norman is Thomas Kowski, and Thomas on our source document is a regular salary. There's nothing else, so we click calculate taxes, save, okay, we add the next one. Okay, and you are, the student is the one, and of course it would have your name on it, not just student. And on our source document, 72 hours is this, because you just started, so you didn't work the full 2 weeks. This is a bi-weekly pay, 40 hours a week. Normally you should have 80 hours, but you just started last week, so you only have 72 hours. So, but there's no union dues because you don't work out in the factory, you work in the office. So we're just going to put in the 72 hours. We don't have anything else to put in, so we click on calculate taxes, save, okay, and we've got one more. Yes, Ruth Williams, and Ruth Williams has a regular salary with nothing else. So we click calculate taxes and save, and okay, okay. And so now we have finished our first payroll. Very simple, very easy, very lovely. Okay, and so we can go ahead and go on. This next thing on our source documents shows us, you know, the percentage tables, calculations that they use for doing FIT. Okay, here's the next thing, which is a payroll report. If I go up into the instructions over to the right, our next one says display the payroll report. Okay, so I'm going to X out of this payroll. I'm done with that. I'm in the payroll module still, but I go to the reports instead of the tasks. Go to the reports and down to the payroll report. Now, the software doesn't do a separate payroll register and a separate employee's earnings records for each employee. They have this thing called the payroll report, and they mix the payroll register with the employee's earnings records. So here on this payroll report, it's dated October 9th, and the first employee is Anthony Bono. And this shows his gross pay for the current paycheck of $14.08. It shows his FIT that was taken out, etc., all the way down to his net pay of $1148.28, all of his deductions. Okay, the second column over is the quarter to date. So the fourth quarter just started. This was the first paycheck of the fourth quarter. So the quarter so far is the same as the current. But next time he gets paid, Anthony Bono's current will be added to whatever's in this quarterly all the way down. And that will keep up with how much is in a quarter. And we'll use that when we get to the payroll tax reports that we have to do at the end of the quarter. And here's his yearly up-to-date amount. So the software already put in January 1st to September 30th for you. And so this $12,730 includes everything up to September 30th, plus this paycheck, this $1408 from early October. Okay, so everything up for the year, and we're going to use that information for doing Anthony's W-2 at the end of the year. Now the next one down is the second employee, James Ferguson. It's the same thing. His current pay is listed in the first column, his quarter to date, which at the moment is the same, and then his year to date over. And if you keep going down, every employee is listed separately, so that's similar to employees' earnings records. We get down to the bottom and we see this one called payroll summary. So these are like the totals from a payroll register. These are the numbers that are going to go into our journal entry. So the gross pay for everybody was $15,456.77 for this October 9th payroll. The FIT for everybody was $836.44, etc. And then, of course, there's the quarter to date and the year to date on those figures as well. All the way down to the net pay for this paycheck was $12,339.69. Now, you're going to want, for the project, to print this out. Each payroll report, I need every single payroll report. Every time you do payroll, there should be a payroll report. You need to print it out or download it so you have it ready to upload for next time. You can't really not necessarily do that easily after the fact, so you can't do all the payrolls and then come back and try to print them. You got to print them as you do them. So you need to print this October 9th right after you finish it. Okay, on our source documents, this shows you what the payroll report should look like. Okay, our next instruction is to generate and post the journal entry for the October 9th payroll. Okay, so we're still in the payroll module. We go to tasks, we go down to current payroll journal entry. Now, unlike what you had to do for, say, the mini project or anything else, the software is going to do 2 of your journal entries for you. So here's the message. Do you want us to generate the journal entry to record the current payroll? Well, yeah, surely. Okay, so we say yes, and here's the journal entry. There isn't just one wages expense. There's a wages expense for administrative personnel, wages expense for office salaries, a wages expense for sales, wages expense for factory workers. And so they're all divided out. That's all our debits. Here we have a credit to payroll cash. That's the net pay, $12,339.69. And then we have our Social Security payable that was taken out, $958.33, etc., all the way down to our union dues payable that was $16 taken out. Okay, if we go to our source document, we see that the same numbers are in there. Everything looks good, so we feel good, and we want to post this journal entry. So we click post. Immediately posts it to the general ledger.